My name is Dick Schoelch from Spectrum Financial Resources with our April 2016 Educational Economic Update. In this video, we'll talk about some of the economic events that influenced markets in the last month and give you some insight into what they could mean for you as an investor going forward. Please stay tuned at the end of this video for a required disclosure statement. Following several months of rocky financial markets, March turned out several straight weeks of gains, giving investors hope for this spring. After months of strength, the U.S. dollar weakened against other currencies. A strong dollar means that domestic goods are more expensive to foreign buyers, which can affect earnings adversely. A comparatively weaker dollar will help make U.S. products more competitive in the global marketplace. Last month was also important for central bank policies around the world. The European Central Bank, the Bank of Japan, and Federal Reserve all held meetings to review monetary policy. In recent years, there's been a division between the Fed, which is moving away from ultra-low interest rates, and European and Japanese central banks, which are fighting slow economies with negative interest rates and quantitative easing. However, comments at the March Fed meeting generally followed what U.S. economists are concerned about, and that is the lack of growth. During the March meeting, the Fed voted to hold interest rates steady and indicated that officials are planning for a slower pace of interest rate hikes this year. Remarks after the meeting show that the Fed economists are divided. However, Fed Chair Janet Yellen has been clear about intentions to remain cautious in the face of global conditions. We also got some good economic news last month. The final estimate for fourth quarter gross domestic product grew at an annual rate of 1.4% instead of the previous 1%. Much of the improvement came from stronger than expected consumer spending. The labor markets also continued to add jobs in March. However, the increased spending at the end of 2015 may come at the expense of growth in the first quarter of 2016. Consumer spending data from January was revised lower, causing downward revisions. Looking ahead, we'll be awaiting reports from the first quarter ended March 31 to see whether numbers support or lessen concerns about growth for the remainder of the year. The Fed will be closely monitoring the data ahead of its April meeting to see whether the economy can support additional rate increases. Will they raise interest rates in April? It's hard to say, but it's not likely. Currently, most economists predict a June 2016 interest rate hike. That's it for this month's Educational Economic Update. As always, if you have any questions or concern about what we've discussed here, please give us a call at 248-643-0033. This is Dick Schoelch of the Spectrum Financial Resources saying goodbye for this month. Thank you.